Hello, everyone. Good morning to you all, from this part of the world, and depending on what the time zone you're tuning in from, good afternoon and good evening to you. Welcome to today's Forex Morning Mastery. In fact, our last edition for the week as we prepare to participate in the last trading day of the week, which, of course, we do know market participants will be rounding off for the rounding off their trading activities ahead of the weekend. Wow, what a week it has been for us all, and we are ending it strong. Before we dive in, I want to let you know that my camera is off today, and so um, we are doing a software update, and that download is taking a bit longer than expected. But don't worry, the energy and insight are still firing on all cylinders. So a huge welcome to everyone on board. And for those of you who are joining us for the first time, you're highly welcome. For those unfamiliar, the Forex Morning Mastery runs Mondays, Wednesdays, and Friday, giving you a detailed follow-up on the assets I track personally on a weekly basis. And one thing it's important for us to all understand that this isn't a signal service platform, but instead an educational community where we come together to unravel the market behavioral patterns, aiming to strategically position ourselves for the upcoming move. So I'm excited to have you join me. And if you have any questions whatsoever, feel free to let me know in the comment section. And don't forget to engage us in the comment section. Today is the last trading day of the week, and that always brings its unique markets situation. We will be dissecting those peculiarities today, focusing on what makes Friday's trading different and how to capitalize on it. And one important thing, or let me say from a psychological perspective, is that we may begin to see market participants round off their trading activities, which will reflect on the chart as price moving in the opposite direction of the prior leading price action. So those who are taking advantage of that huge momentum during the course of the week may want to start taking some profit, and as a result could evolve into reversal setup, which we are also going to be looking at today. So far this week, we have been monitoring three financial instruments. We've done pretty well across all of these assets. We looked at the US all spots and the ongoing geopolitical tensions in the Middle East, and how oil prices had continued to rise. The market had rallied earlier, supported by supply concerns, and we've been positioning ourselves well around those moves. And on the GBPUSD, we saw a sell-off following the dovish remark from the Bank of England, along with strong US data gave us solid opportunities on that one. If you have been following our update, you should have secured some gains at this point in time. But today we are going to be diving in to see how we will be following up on this one. And lastly, on our watch list is my favorite, that is the XAUUSD. Gold has been seeing safe haven flows amidst the Middle East conflicts, and with the US dollar strength easing off a bit, it's set up for some technical opportunities coming today. And in fact, I do have some simple and insightful trading setup for us all today to help us navigate this current market dynamics. So I encourage us all to stay tuned in, as you do not want to be missing out on any of these interesting ideas. I see your comment, Hester Dimachi. Good morning to you. Glad to have you around with us this morning. So, with that being said, here we will be diving right into the business. And as always, the first thing we normally do is to keep tabs with the fundamental factors that has been influencing the sentiment in the market this week. And of course, we are going to be looking to see what other events will be coming up today to drive the market sentiment. And of course, by checking on the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves for the next move. Now, based on the asset we've been monitoring so far this week, we have been focusing on high impactful events from both the United States and the United Kingdom economic docket. Except for days where we do not have high impactful event, we usually include mid-tier economic features. But for now, let's review what really has happened so far this week. We are going to be touching on the high impactful event before we go into what to look out for today. So as at the beginning of the week, we were looking at the GDP annualized Q2 from the United Kingdom. For those of us who do not know, this data measures the total value of goods and services produced by the UK economy. And from what we have here, the actual data came in a little bit lower than what market participants were expecting. They were looking at 0.6% expansion just like the previous quarter, but unfortunately, it came in at 0.5%. A little bit lower, but the fact is that the economy expanded, which is the most important thing for the UK economy. And of course, we saw how the market reacted to that. We saw some bullish traction at the beginning of the week before the bearish traction began after the Bank of England's dovish remark on, it wasn't on Wednesday or Thursday, that was. Then on that same day, we had the Fed chairman's speech where he did emphasize that though inflation is easing, but the monetary policy will not be as aggressive as the previous month, which has also given some positive traction in favor of the US dollar. Then we saw the ISM manufacturing PMI on Tuesday, a data that gives us an insight into the health of the manufacturing sector in the United States. And like I did say, a reading below 50 suggests a contraction in that sector, which can weaken the dollar as it points to slowing economy, while a reading above 50 signals an expansion in that sector. However, the data came in below market had expected. In fact, the manufacturing sector in the United States hasn't been doing well in the last couple of months. Then on Wednesday, we had the ADP employment change, which is a labor-oriented data. And for those of us who saw the Fed chairman's speech on Monday, he did emphasize that the Fed is looking forward to labor-oriented data to determine the magnitude of interest rate cut next month. And this is one event everyone was actually looking forward to, as the ADP gives us an insight into the number of new jobs that was added in the US private sector. And the data, of course, came in higher than market had expected, giving us an insight into how resilient the labor sector is being despite the interest rate cut. Then on Thursday was the ISM Services PMI, a data that gives us an insight into how well the service sector in the United States has been. And for those of us who do not know what the service sector is, this is one of the most sensitive sector in the United States. And the service sector is that part of the economy that provides services rather than producing physical goods. So it includes industry like healthcare, education, retail, finance, real estate, hospitality, and the like. So these are economies that just provide services to consumers, and it's always been very a rosy and robust economy in the last 3 to 4 months. And of course, as we all expected, the data came in higher than market had expected, had a 54.9 showing resilience, and this of course has further supported the US dollar in the last 36 hours. Now, going into today's session, today Friday, October 4th, we are going to be looking forward to some very, very important labor-oriented data like the average hourly earnings. For those of us who don't know, this data measures the changes in pay for workers in the United States. And it's also a key indicator of inflation. If wages are rising quickly, it could lead to higher inflation, prompting the Federal Reserve to raise interest rates, which often strengthen the US dollar. But at this point in time, the Fed wants to continue to cut interest rate, but the magnitude is the bone of contention at this point. So, like he said on Monday, if the labor sector is showing strength, then they might likely cut interest rate by 25 basis points. But if it's not, if it's showing strength, they might likely cut it by 50 basis point cut. But if it's showing weakness, it might be a 25 basis point cut. Then simultaneously, we will be looking at the NFP, that is the non-farm payrolls. This is one of the major important events for this week, which has a tendency of bringing high liquidity into the market, as majority will be looking forward to see how many jobs were added or lost in the United States economy for the last 30 days. Now, this data here excludes the agricultural sector, of course, and a strong report usually signals a healthy economy, which can lead to a stronger US dollar, while a weak report can have the opposite effect on the US dollar. Now, if we look at the previous month data, it came in at a 142,000 growth in employment outside the agricultural sector. And this month, for the previous month, economists are projecting that the data will come in a little bit lower than the previous month at 140,000. Now, the question now is, what will the actual data be? Will it be just as market had expected, below expectations, or even beyond expectations? But one thing we do understand is that due to major key players having key insiders inside this department, they have an idea of what is likely going to happen, and as a result, they will be building their position ahead of this event. So as retail traders, what we are going to be doing here today is to sniff through the chart, looking out for structural patterns that could give us an insight into what is likely going to happen, giving us an edge we want to bank on today. So with that being said here, let's dive right into the business. So as always, the first asset we normally take on is, of course, the USOILSPOT, and in fact we've done pretty well on this particular asset since the beginning of the week. Remember, we had a couple of losses at the beginning of the week. We had the sell which closed at break even, before that momentum began during the New York session on Tuesday, and since then we have been looking out for buying opportunities in this particular market. And this, of course, has further been supported by the escalating tension in the Middle East. Remember, the potential for disruptions to oil supply due to the Israel-Iran conflict is a major factor driving oil prices to the upside. And the threat to Iranian oil infrastructure is particularly significant. So we do not know what the Israelis' attack is going to be like, and when it's going to happen. This is further bringing in some concerns as regards oil disruption, and of course there may likely be oil sanctions on Iran, which obviously could reduce the supply of crude oil to the global market. Remember, Iran is doing about 1 to 2 million barrels per day, which is quite significant, and if this is taken off the market, it could likely cause some scarcity, further increasing oil prices. Now, the risk of retaliatory attack on oil installation in Gulf countries adds to the uncertainty as well, and upward pressure on prices. Now, looking at what is going on at this point in time, what is the look in the market? What is likely going to happen for today? Well, before we go into that, let's run through how the week started for us. Also, we can have a background knowledge of what led to the decisions we made, and for the sake of those who are joining us for the for the first time, you'll be able to be on the same page with us. So we will be deliberating on the 1 hour time frame. Basically, that's our execution time frame. And if you do want to have an overview into how we started this analysis on Monday from the higher time frame, I suggest you check my video on the USOILSPOT on Monday. Now, looking at the structure here, the first thing we did observe at the beginning of the week, after identifying a descending channel on the 4 hours time frame, was the fact that price action was sitting on a robust demand zone. And this demand zone you see here has been holding by pressure since the beginning of the month of September, further emphasizing the strength of the buyers around this area. And one thing we also took into account is the fact that despite the strong bearish momentum in the last 2 to 3 months prior to the beginning of September, we saw how it had become difficult for sellers to break through this particular zone between the $66.25 level and the $67 area, further emphasizing the strength of buyers around this area. And one thing we agreed at the beginning of the week is that we will be looking out for buying opportunities. And we also went further to say that if we are going to be selling, if the market gives us a bearish expectation, that we will ensure that we are around to move our stop losses accordingly to secure position as the market could spring back up at any point in time. So for us to guide our decisions ahead of the week, we had a range bound structure identified here between the $68.60 level and the $67.85 area, giving us a range bound structure to work with. And you know how we do it. Whenever we identify this kind of structure, we wait patiently for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, at the beginning of the week, we had a couple of buy positions. We did not do very well. This one was at a break even. The second one went into a loss, as you will see here. And of course, we saw price drop down this support line, triggering some sell position, which at the end of the day was taken out at a worst case scenario break even. Now, with the way things were going, we positioned ourselves above multiple levels like the $67.85 area. On Tuesday stroke Wednesday session, we had another one at the $68.60. We also had another one here at the $69.20, all of which were triggered with that engulfing bullish candle that sprang out of that structure. I think this was following the attack on Israel. Yes. So this continued to the upside before we saw this choppy market condition. And if you are with me on Wednesday, we identified new setups to navigate that structure on that particular day. And one of the things we did identify here was the fact that price action was at a crucial juncture. Remember, this was the resistant line of that descending channel we identified on the 4 hours time frame. I think I need to show you so that we can all be on the same page and see how important that resistant line is. Now let's scale up into the 4 hours time frame. So this is the resistant line here, and look at the descending channel we identified at the beginning of the week, as you will see. And the bone of contention during the midweek was that resistant line right here. So we were considering what will happen there. Will it be a true breakout, or will it be a false breakout that could incite selling pressure if price drops back below the resistance line? So as a result of this, we were able to identify a setup. So I will be going back into the 1 hour time frame, our execution time frame. So right here on the 1 hour time frame, we did marked out a structure which appears to be an uptrend continuation pattern. So we saw this whole move, we saw the horizontal line, and then we saw this one right here giving us an ascending triangle, which technically is considered to be an uptrend continuation pattern. And of course, the breakout of the structure was all we needed to join that move. Though the breakout happened, we added some more buy positions, but at the end of the day, we were taken out with some modest size of profit after that strong bearish momentum happened, as you will see here. Now, on Thursday, I updated us that if we see any form of reversal pattern here, we will be joining a decline. But if price maintains momentum above the $71.40 level, which obviously is above the resistance line of that descending channel, we will be adding more buy position. And since yesterday, as you will see, price had continued to find higher highs and higher lows, and with multiple entries as well, we were able to maximize the potential of this bullish move. And for those of you who are still running your buy position at this point in time, I will advise that you move your stop losses right now, secure the current buy position, as we might be seeing some volatility happen today, maybe take us out of this position, or price could continue to the upside. So moving your stop losses around the $73.50 area is looking promising. Remember, you do want to be giving enough breathing space for price action to move around. Now, with a well-secured position at this moment, what are the chances that buyers and sellers have today as we join the market, round off their trading activity ahead of the weekend? Now, looking at the positive drivers here, I already talked about the escalating tension in the Middle East, the threats to the Gulf oil infrastructure, and of course, recently we learned that there is a scheduled maintenance in Kazakhstan as they plan to temporarily shut down the oil facility for maintenance purposes, and this could temporarily reduce oil production from that particular area. And of course, it's going to be influencing the supply in the market. Now, with this situation, we expect a reduced supply in the market, and you know, when there is reduced supply, the scarcity increases, and when scarcity increases, what happens? Price will definitely rise due to demand. So that is another factor here that could support the uptrend scenario here. Then another one is the Russia reported yesterday that they are going to be adhering to its production targets under the OPEC Plus agreement, which suggests that production cuts are being implemented accordingly, and this could further influence the supply in the market as well. However, in as much as the path of least resistance for US oil remains to the upside here, we cannot ignore some other factors behind the scenes that could influence selling pressure. The OPEC Plus did say that there is a significant spare capacity to offset any potential supply losses which may result from Iran being taken out of the market. So that is one good news for sellers there. And another thing that could also influence selling pressure on the USOILSPOT is the resumption of the Libyan oil production. In fact, the reopening of the Libyan oil field and export terminal will increase global supply and may put downward pressure on oil prices. So this also needs to be taken into account. Now, on Thursday, was it on Wednesday or Thursday, I told us about a larger than expected increase in US oil inventory, which signals that there is lower demand in the US and could weigh on oil prices. Now, with all of this sentiment, all of this contradicting sentiment, how has the market digest that information, and how are they going to be behaving ahead of today's session? Well, with this current situation we have here, let's go back into the chart and let's look at things from a technical standpoint. As it is right now, I still have a strong feeling that price could continue to the upside. However, in as much as the bullish is still looking very strong, we cannot ignore the potential that sellers could bring price back to retest the resistant line of that descending channel we identified on the 4 hours time frame right here. And if we look at the distance between where price action is and that trend line, we are looking at over 350 pips, which is something that we would also want to take into account while we review this technical structure we have in here. Now, the recent $74 level, which was my resistance line this morning, I added another buy position above the structure, as you will see here. And the question now is, will this break out of this resistance line, the highest level price action has been for this week? Will it turn out to be a false breakout or a true breakout? Now, how do we know if this is a false breakout or a true breakout? Well, if it's going to be a false breakout, then we want to see price drop back down below the $74 area where continuous selling pressure below the structure will be a signal that buyers are finding it difficult to maintain momentum above the $74 area, hereby triggering a sell move to the downside. And in fact, this could lead into, let me say, a head and shoulder pattern. So like this, we have the right shoulder right here, we have the head right here, and if price drops below the 74, we could have the right shoulder in place. Hence the key level, the neckline will be below the $73.50 level, which could be triggering a bearish bias if price action breaks down that structure right there. So we will see if this is going to be the case today. That is, this breakout turns out to be a false breakout, leading into a potential reversal pattern. Then we sell the breakdown retest of the neckline, which potentially at this point could be around the $73.50 level. I hope we all understand what I'm saying here, but if you don't, please just let me know. I can easily rephrase myself to make things a little bit clearer. So for selling ideas here, we want to see price break back down below the $74 area, probably evolve into a reversal setup, and then we will only sell at the breakdown retest of that neckline. I will definitely be giving us updates as at when due on both my TradingView and Telegram platform. However, if the price continues to maintain momentum above the $74 area, then this will be a good signal that buyers are still very strong in this market, and it will make a lot of sense for us to continue to look out for buying opportunities. And for those of us who had missed out on the breakout of the $74 level, I will suggest that you exercise patience and see if the market will come back to retest the structure. It could drop down a little bit, but if buy pressure evolves here on our lower time frame, then we could actually join that uptrend move. And I will be updating us on multiple entries if there are, as we continue to monitor price action today. So this is my simple view on the US All Spot today. Our center of focus is between the 74 and the $73.50 area, where depending on the structural pattern that forms in the next couple of hours, we'll decide if this is a true breakout or a false breakout. So let's see how this is going to play out in the next couple of hours. I will be sharing us technical updates on lower time frame as we prepare for the NFP today in my comment section on both my TradingView and Telegram platform. If you have any questions whatsoever or you need some further clarifications, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. And do not forget to click on that like button if you have found this content helpful and useful in making your independent trading decisions. All right. So, in the absence of no questions, I want to assume that we are all on the same page. I see you, Leon. How are you doing? Good morning to you. I'm very well, thank you. Trust you are doing very well too. All right. So, let's move on to the next asset on our watch list. Stay tuned in. So the next asset we are looking at is the GBPUSD, that is the British pounds against the US dollar. And though the week did not start very well for us, we had a couple of losses after buying at the 1.33970 at the beginning of the week. But fortunately for us, we were able to recoup the losses we incurred and of course made some significant profits on top of it. Now, let's take a rewind back into the beginning of the week. Let's see what really happened and how we positioned ourselves for this move and how things are going on at the moment. So, at the beginning of the week, remember we had my top-down analysis from the daily to the 4 hours time frame in my weekend video on the GBP USD. So we will be focusing on the 1 hour time frame. So if you in any way missed out on that video, I would encourage you to go ahead and check that video out to have an educational view into how we identify the key level we will be using to monitor price action this week, and of course the structural details on the higher time frame. So let's go into the details here on our execution time frame. Now, at the beginning of the week, we had a key level at the 1.33700 area, and you know how we use our key level. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying. We are not going to be selling unless this level is breached and broken to the downside. Now, in addition to that key level, there was this temporary trend line after capturing the series of higher lows since last week, Wednesday. And in fact, at the beginning of the week, this was where price action was, right above that key level. And we were of the opinion that this trend will continue if price continue to sit above this trend line. And in that video, I went on to explain that we are at a crucial juncture in the market after taking into account what has been going on in this market for about 6 to 7 years, where that area around the 1.34350 area at one point in time served as both resistance and support line in this market. And for the fact that this area has been a strong key level, I did say that the inability of buyers to break out of the structure throughout last week was more or less a signal that we might be seeing a slowdown in bullish momentum that could trigger a massive sell-off. However, we were not taking anything into we are not taking anything for it as it is. We are just trying to make sure we open ourselves for both perspectives. So if price continues above the trend line, we were feeling comfortable in a bullish idea. But if price breaks down the key level, then we want to be selling. Now, in order to help us position ourselves for the move at the beginning of the week, we marked out a range bound structure which lasted for about 8 to 10 hours as price was confined within the 1.3397 and the 1.3370 area. And of course, you know how we treat our range bound structure. We wait for price to break out to buy or breakdown to sell. So at the beginning of the week, we were buying. We had a couple of buy. We had one here. We had another one here, all of which went into a loss. And then we saw price break down that ascending trend line, which triggered a bearish idea. And as a result, we were looking out for selling opportunities at the breakdown of the support line of that range bound structure. So we saw price break down the structure. We saw a breakdown, price came back to retest, and since that moment on Tuesday, price continued to drop to the downside. And in my commentary on Tuesday morning, price action was around the 1.3320 area. That was a strong demand zone area, as you will see here on Wednesday. And in fact, if we go to as far back as 2 weeks ago's Friday, it was serving as a selling niche at that point. So we said on Tuesday, was it Tuesday morning in my commentary, that if price breakdown retest the zone, we will be adding more sell position to our existing trade. But if we see a reversal setup like a double bottom head and shoulder pattern around this area, we will be buying the breakout of the neckline, which obviously never happened. So instead, we saw price break down again, retest the structure, welcoming more selling ideas. Now, during our live session on Wednesday, I was able to identify another trading setup that will be helping us navigate the structure, and it was a very simple trading setup. As you will see here, this is the GBPUSD 1 hour time frame. For those of you who are part of the live session on Wednesday, this was what we were looking at, a beautiful descending trend line, as you will see here. Then we begin to notice price go through a consolidation phase, and initially we were thinking that this could turn out to be a reversal setup that will break out of this descending trend line to incite a correctional move. And as a result, we were looking at something like this: breakout, retest of the neckline to continue an uptrend move. In fact, we had a buy position triggered that also went into a loss before the momentum continued below the trend line, giving us more opportunities to join the breakdown of the support line at the 1.32500 area. And as you will see, we rode the momentum all the way down into this area, added another one yesterday. I shared this updates on Wednesday evening that we are adding another sell position below the 1.316. So as at this moment, all positions are being closed. That is, if you had moved your stop losses accordingly, just like I did advised in my commentary yesterday, you must have been taken out of all sell positions on the GBPUSD. And for those of us who did capitalize on this bearish opportunity, well done and kudos to you. So as it is right now, preparing for the last trading day of the week, what are our plans? Are sellers going to continue the momentum to the downside, or is it high time for buyers to begin to gain some traction? First of all, if we look at this trend line, extend it further, I will be looking forward to price maybe coming back into this trend line to incite another sell-off, or will price just continue the downtrend move from the 1.31600 area right here. Now let's quickly run through the fundamental factors that might influence the sentiment in the market today. Now, there is a strong feeling that there's a strong sentiment in the market that there is likely going to be a relatively positive US non-farm payroll today. And this is as a result of the positive data coming in from the labor sector in the United States during the course of the week. We had the US jobless claim count, which came in positive. We had the ADP employment change, which also came in very positive. And as a result, market are expecting that the NFP as well will be coming in higher than expected. And this has reduced expectations for aggressive Fed rate cuts, and this has continued to strengthen the US dollar all week long. Now, the rising Middle East tension, that is the increased geopolitical uncertainty from the conflict in the Middle East, is also boosting safe haven flow into the US dollar as well. Now, another thing that also has been supporting the US dollar and could likely increase the momentum today is the better than expected US services PMI reading, which we saw during the midweek, and this has, like I did say, dampened expectations for further Fed rate cut. And as it is right now, I still strongly believe that the path of least resistance for the GBPUSD is going to be to the downside because of the resilience data from the US economy, and of course the dovish comment from the Bank of England, who suggested that potentially there's going to be more aggressive rate cuts by the Bank of England in the next coming month. So for me, I still strongly believe that the path of least resistance is still to the downside. Now the question now is, how do we join that bearish momentum? Where are we going to sell, or where are we going to buy if the price does the contrary? Well, at this moment, if we look at the structure, it's quite simple. We have a descending trend line in place, and of course, you know how we treat our descending trend line. We want to be looking out for selling ideas. Now, with price back into the 1.316 level, which was broken to the downside yesterday, well, we want to see if this is going to be a sort of retest of structure to continue the downtrend move, or will price resume the uptrend scenario back into the trend line before another bearish leg happens. So our center of focus this morning is going to be around the 1.31600 area, where we want to monitor the character of price action around this area to give us a clue into what may likely happen today. Now, as you'll see, in the last 3 to 4 hours, price had continued to consolidate around the 1.316, emphasizing the crucial nature of this particular area. So for me to consider selling around the 1.316, I would like to see a reversal setup evolve here on the lower time frame. It could be a double top structure, head and shoulder pattern, or a rising wedge, where the breakdown of the neckline will be all we need to continue the downtrend move. And if the opposite happens, that is, price breaks out of the 1.316, this could welcome some short-term buying opportunities if price does a retest of structure, confirming that sellers may have lost or temporarily lost some momentum, bringing price back into the trend line. So this could be a short-term trading opportunity. So for those of you who are scalpers and those of you who like taking counter trend opportunities, this may be something you want to be looking at. That's about 65 pips to check here, and let's see if price gets into the trend line. Then depending on what happens here will determine if we are buying. So if we are buying, a breakout retest of the trend line welcomes more buying opportunities. But if reversal setup forms here and buyers find it difficult to maintain momentum above the trend line, this could incite the beginning of the second leg of the bearish momentum that started this week. Now, our center of focus is right here at the 1.316. Let's scale down into the lower time frame. Let's see what has been going on here in the last 3 hours, and if there is any sign that we could be seeing a trading setup to take advantage of. So I will just bring this right. So we have the 1.316, and first of all, I think we have a trend line. So let me bring out my line chart. So I think we have a trend line here, as you will see. Let me extend this further. Okay, so we have a trend line here already, and look at how this trend line had incited bearish idea, though inability of price breaking out of the structure has led to higher highs here. And finally, during the early hours of today, we saw price break out of that structure, and it has been retesting that trend line, giving us signs that buyers may likely want to temporarily move price to the upside. Now, will this be a case today? Well, let's see if bullish momentum will be maintained above this structure. I want to see a significant breakout, then retest of structure, then I want to join an uptrend move. However, if this is not the case, then a breakdown retest of this trend line will be all we need to continue a downtrend move. So I will mark out a level here, which is at the psychological area, that is the 1.31500 area. So I want to give this a different color. So let me give you a coffee brown, and we have the 1.31500 level. It's a psychological level considering the round figure of that price. So let's see how the market is going to be reacting to the structure. So if we see a breakdown retest of this 1.315, price would also have broken down that ascending trend line, giving us a good signal to sell the GBPUSD. But if price continues to maintain momentum above this temporary trend line on the 15 minutes time frame, then we want to maintain a bullish bias above the structure to continue that uptrend move. And mind you, I did mention that this is likely going to be a temporary move, maybe in the aim of testing that descending trend line we identified on the 1 hour time frame right here. And I said we have about 65 pips move in that regard if price ever gets into this point. And please note that this is a counter trend opportunity if you are joining this bullish move above the 1.316, and as soon as price moves significantly, kindly move your stop losses at least to break even to secure the position. And as soon as price gets into this trend line, we want to exercise patience and see if price will break out of that trend line, which will definitely welcome buying opportunities, or will find barrier to incite a selling move from that particular area. But trust me, I will be with you in the comment section of both my Trading View and Telegram platform to give us all updates in that regard. So this is my simple view on the GBPUSD today. I hope I made myself very clear, but if you have any questions or you need some further clarifications, feel free to let me know in the comment section. So I will take the next 10-15 seconds as always. Let's see if there are any questions before we move on to the final assets on our watch list today. Stay tuned in. All right. So, in the absence of no questions, I want to assume we are all on the same page, right? So, with that being said, let's move right into the final asset on our watch list. So the final asset on our watch list is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And what a phenomenal week we had here. Though it's not I won't consider the gold as the most profitable asset on our watch list for this week, as the GBPUSD is taking that spot for this week, but at least we were able to do pretty well across this asset. Yesterday might be very challenging for scalping this market due to the choppy market conditions we experienced following the economic data from the United States yesterday, and that is why I did not launch the go challenge for yesterday's session due to that expected volatility in this market. But for swing traders, positional traders, this is a very tremendously interesting situation that gave us some significant amounts of profit. Now, going into today's session, will this momentum continue? Well, I'm beginning to doubt that due to a lot of reasons behind the scenes, especially the recent US dollars recovery from its low, which has been driven by positive economic data. We saw a strong labor market, rising non-manufacturing PMI, though it was lower than the 50 mark, and of course the ISM service PMI too have shown signs of US resilience, which is expected to drive the US dollar today. That is the expectations from a theoretical perspective. Now, another factor here is that this strong data coming in from the United States of late is further diminishing the odds of the Federal Reserve cutting, bringing in a high cut just like last month. So expectations for a less drastic interest rate cut by the Federal Reserve are limiting gold prices at this point, as you will have noticed that since the week began, despite the strong bullish momentum, that area around the $2,666 level, remember this was our resistance line at the beginning of the week, had continued to negate all attempt by the buyers to push price to the upside. Now let's quickly run through our structures at the beginning of the week so that we can all be on the same page together. So at the beginning of the week right here, the first thing we did here on the 1 hour time frame was to acknowledge this trend line. That is, since price tested that all-time record high at the 2,686 last week, we begin to notice a series of lower highs and lower lows, and as when we connected the series of lower highs, we had this beautiful descending trend line. Now, in addition to that trend line was the fact that price was confined within a range bound structure during the first 10 hours of the week. Given its range bound structure, we missed out on the sell opportunity here, and we were waiting for price to come back to retest the structure, maybe to continue the downtrend or even break it out to continue the uptrend move. So as a result of this, I updated us, I think on Tuesday morning, that we are at a crucial juncture here between the 2,643 area, and I think I still have the setup here, a setup I updated us with. Let me see if I have it. Okay, yes, I do have it. Now let's look at it together. So this was a setup I updated us on Tuesday morning, right here. This was a setup I updated us with, and I was looking at this area between the 2,643 and the $2,329.50 level, remember, and I did label it as a critical point where, depending on what happens around this area, will determine if we are going to be buying or selling the XAUUSD. And of course, if we are planning to sell, we want to see reversal setups, that is continuous selling pressure to join that decline. But if price maintains momentum above the zone, then this could be a platform for higher highs. And as you will see, we were able to capitalize on that move, and then we added more buy positions at the breakout of the 2,647 as we rode that momentum all the way into the 2,670 area. And I did updated us that we move our stop losses, and if you did, you must have been taken out with a reasonable amount of profit. Now, in my commentary yesterday, on Wednesday, we identified another structure, a range-bound structure, of course, which led into some choppy market conditions. We had buy positions triggered, sell positions triggered, all of which went into a loss there before later yesterday, I think I had another setup yesterday prior to the beginning of yesterday's session, and this was the setup. Yes, this was a setup I shared with us guys yesterday. And in this setup here, that's the trend line, very intact. Now, what I did acknowledge here is two demand zone areas. we had a demand zone here which started the week. That's what at the 2,624 area. And then I mentioned that we also have another demand zone. So yesterday morning, this was where price action was yesterday morning, just right within a temporary demand zone, a zone which has been negating the attempt of sellers to break through for about 24 hours, making it a crucial area to join a bullish opportunity. Now, with that said, here we were looking to buy above the structure, and I think a couple of hours after I updated us with the structure, I gave us a structural update on the 15 minutes time frame, as we notice a potential reversal pattern from this particular area. So I said we are buying above the 2,646, and then we will be adding more buy position at the breakout of the 2,650. And you see what happened. Price though, we got some buy position triggered, then it came back down again, and then it went back up. So it was more of a choppy situation, but if you were resilient and stayed faithful with the analytical approach, you must be in profit at this point in time, or being taken out of the position with a significant amount of profit. And once again, well done, kudos to everyone who was part of this profitable journey. Now, as we move on into today's session, what is going to be our plans? How do we intend to navigate this setup going into today's session? Well, let's look at the structure here closely, and I hope to have a new chart for this, but let's see. Okay, let me start from this structure we showed here yesterday. So look at what we have right now. So price since yesterday, since the beginning of the week, had continued to find selling pressure around the 2,668. Now, are we going to see price break out of this structure today, or will this be a platform for selling opportunities? Like I said earlier, the recent recovery in the US dollar may negate this bullish attempt today. And of course, there is a diminishing odd for aggressive federal easing for next month. And the expectation of a positive US non-farm payroll today may likely crash the gold today. And I still strongly believe that major key players will want to step aside from the market right now, waiting for the NFP to happen before making any aggressive bets. So as a result of this, I want to be leaning, something in me is leaning towards a selling, a bearish setup today. So let me, if I can place it on percentage, I'm leaning 60% towards selling and 40% towards buying today. Now, with this idea in mind, how do we intend to navigate the structure? So I would like us to scale down into the 15 minutes time frame. Let's have a new chart to see how we will be navigating this market today. Now, this is the 15 minutes time frame right here, and I'm beginning to see an area that can be used to navigate to the structure, and that is the $2,661 level. So this is right here. We have the 2,661 level, and if you look at this closely, you will see that buyers have been struggling at this point. Now that is one. Then secondly, I think we have a trend line too as well, an ascending trend line, which will be helping us navigate the structure. So we have connected series of higher lows. We have something like this. So I think we'll be making some adjustment right now to capture all the pivot lows, or majority of pivot lows. Here we go. So in the last 24 hours, the market has been finding bullish opportunity. However, one interesting thing happened during the early hours of today. We saw price break down both the ascending trend line and the 2,661. Now, before the breakdown of this ascending trend line happened, there is something interesting I saw here. Now, look at the structure after this impulsive bearish leg. You saw price came back into the structure, We saw price come up here. Price comes back down again into the trend line. Buyers try to increase the momentum right at the trend line, but it failed woefully, resulting into what looks like a reversal pattern in the form of a head and shoulder pattern, where the neckline of that reversal pattern lines up beautifully with that $2,661 area, a level which shares a beautiful confluence with that ascending trend line. So you can see how crucial that area is. Now, with the fact that price action has broken down the neckline of that reversal pattern, that's a beautiful signal that sellers may want to be taking over the market today. So if you had missed out, well, I missed out on that one anyways. If you had missed out on that one, let's see if the market will come back, retest the 2,661 or the trend line in an attempt to continue the downtrend move. So that is what I will be looking out for to join a bearish momentum at this point. So for me, I will be taking off buying expectations from the table, except if price climbs back above that ascending trend line. Now, another level can be identified here if price does not go back to retest the structure. So we have the 2,657.50 just right here. 2,657.50. Let's label that level out. 2,657.50 level right there. So what I'm trying to say here is that if price does not come back to retest the structure and instead continue to drop to the downside, well, a breakdown retest of the $2,657.50 level will be welcoming selling ideas for us. So we are at a crucial juncture today as we anticipate the NFP just right within the 2,661 and the 2,657 is what we will be looking out for, and depending on the direction of the breakout today will determine or will give us a clue of where price will be closing for this week. So let's see how the market is going to play out within this range bound structure. We already have price below the ascending trend line, so I'm also looking at this possibility here, extending this trend line down to capture this pivot lows here. And right now we are at a crucial juncture where, depending on what happens around this area, will determine what next to do in this market. So let's see what happens around this structure. I will definitely be giving updates on both my TradingView and Telegram platform around this particular structure. So this is my simple view on the XAUUSD today. Let's see how the market is going to play out from this area. And for go challengers, of course, we will be running the session in about 20 to 30 minutes from now. Let's see how we can scalp this market together from this particular area. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we go ahead to round off our Forex Money Mastery session for today. And do not forget to give that video a thumbs up. Your likes are very, very valuable to me, and in fact it also goes a long way in helping the YouTube algorithm identify this video and push it to a wider audience of traders who may find this content beneficial to them too. Thank you very much for your support. I really do appreciate it. So let's see if there are any questions before we start rounding off today. All right, so I see a couple of comments here from Oduena. Good morning, Oduena. How are you doing? You're welcome. I'm glad you found that useful. I'm glad to have you around today. Hello, John Halabi. It's been a while. How are you doing today? Glad to have you around. So, John is asking, where are we looking to buy today above 2668? Well, first of all, I did mention this earlier, but I will just take us through again so that we can all be on the same page. Now, first of all, we have an ascending trend line in place right now where the first one has been broken to the downside, as you will see here. And this breakdown comes after the formation of a reversal pattern, which is looking like a head and shoulder pattern, which I did mention earlier. And the breakdown lines exactly at the neckline of that reversal pattern. Now, for me to continue an uptrend at this point in time, I would like to see price climb back above the 2,661 level, which obviously will be above the second ascending trend line, and then we want to be looking out for more opportunities to buy if price goes ahead to break out the second ascending trend line to the upside. So the minimum area to look out for buying opportunities at this point is above the 2,661 level, since it still maintains the ascending trend lines idea. All right, are we on the same page on that one? So that is what I'm looking out to buy, and I could later consider buying around this area, but that will depend on the structural details that emerges before, or let's say 30 to 15 minutes into the non-farm payroll. So that is very subjective at this point in time. But yeah, the only condition that will make me buy is at the 2,661 area for today. I hope I answered your question there, John Alabi. Then I can see Sahid says that what will happen if war activated in Middle East? Well, war has already been activated in the Middle East. There's been war going on for over a year now, and the only thing we're just worried about is the escalation of this war. Israel has been attacking, bombarding Hamas in what's the name of this country again? It just escaped my mind now. I don't know why. And they started another new war at bombarding the Hezbollah in Lebanon recently, which has been going on for about 2 weeks now, 2 or 3 weeks now. So the war has been going on. The only fear right now is the escalation of Iran into the picture at this point in time, which definitely will favor a strong appeal for safe haven assets such as gold assets, silver, and the like. So everyone is still monitoring the situation right now. I'm always on the news trying to see what is happening, because I know if this escalated, price may likely rise ahead of the weekend. So let's see how the market is going to play out around this area. We have a structural detail that will help us guide our decisions around this particular area. So I hope I answered you there, Sahid. Will gold break its ATH? I'm not sure I understand what ATH means. Please clarify that, Sahid. You're very much welcome, John Alabi. Glad to have you around with us today. Nelly says that, please, what's the name of the strategy you are using? That's an interesting one. What's the name of the strategy I'm using? Well, I don't have a name for the strategy. Probably one day I will call it Sharif Daramola strategy. But my strategy involves price action in conjunction with fundamental analysis. So I try to understand. One thing I've come to understand about the market is that what we see on the chart, we are not seeing price, but we are seeing emotional the evolution of the emotions of market participants in the market. And this evolution of emotion evolves into structural patterns that we can use to understand where the emotion is swinging to. Is it swinging towards the bullish side or the bearish side? So let me just put it simply. My strategy involves price action, understanding price action by incorporating fundamental analysis into it. So that's how I'm going to state it here. I hope I made myself clear there, Nelly. All right. So okay, all-time high. Okay, You're saying, will gold break its all-time high? Well, no one knows if it's going to break the all-time high, but in as much as I like to say that it will break the all-time high, I refrain myself from saying that because the market can do anything. So what we actually do here in this community is to take it a step at a time. Now, where we are right now will determine what we are going to do next. And what we are going to do next will let us know if it's going to break the all-time high or not. So let's take it a step at a time. We will take it as it goes, and if price breaks down the all-time high, we will already be in the market to be part of that breakout. That's what we do. All right, you're welcome, Saeed. I love you too. All right, you're welcome. You're welcome, Nelly, too. All right, guys, I think at this point we have come to the end of today's Forex Morning Mastery. And so it has been a wonderful moment with you guys. I really do appreciate your support. You guys are wonderful. We had over 16 people on board today, which is quite phenomenal. And unfortunately, we have less than that number liking the video. So I really appreciate your support. The more the likes tally with the number of people on board, the higher the chances that YouTube will push the video to a wider audience of traders who may find the content beneficial to them too. So for those of us who are yet to click on that like button, please do. It goes a long way in supporting the community, and of course it inspires me to continue to do more. And thank you very much for your support so far. So I guess it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. This week has been very good, though we did not start very good this week, but fortunately we were able to recoup the losses we incurred, especially on the USOILSPOT and the GBPUSD. I think we also had a loss on the XAUUSD yesterday too as well. But at the end of the day, we are still on the positive side of our portfolio. And well done to everyone who had stayed faithful to our analytical approach. And so we were able to take on all of the three financial instruments, the GBPUSD, the USOILSPOT, and of course the XAUUSD, identifying simple trading setups that we are going to be using to navigate the market today. I do hope you are able to mark out these levels accordingly on your chart. If you have done so, well done, kudos to you, and let's see how the market is going to play out. Let's exercise patience and allow the structures to mature. And always remember that the Forex market is a risky business, and hence you want to have a well-defined risk management strategy in place. Every decision we make is more or less an educated guess until price action hits your TP target. So ensure you have a well-defined risk management in place. And for those of you who are joining us for the first time, you are highly welcome on board. Very glad to have you around with us, and I do hope you are able to gain one or two things from what we have discussed here today. If you did, you want to be part of our subsequent edition. The next time is Monday, same time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well this asset did this week, and of course prepare ourselves for the new week session. And if you're yet to subscribe to the channel, please do right away, as I will be dropping some educational and insightful trading setup in preparation for next week during the course of the weekend. And for the go-go challengers, I will be with you in the next 20 to 30 minutes, so stay tuned in as we will be scalping into the NFP together today. And it's on this note I do want to wish us all the best of luck today. Trade smart, trade consciously. Do have a wonderful evening and a wonderful weekend. Bye.